Hello, everybody. Welcome. We heard that there is going to be a plan to save American economy. So there is why there is a plan to $2 trillion come and save the American economy. Well, it's a quite impressive amount. That is why I want to talk about it with Davide Biocchi, trader from Directa. Hello, Davide.
First of all, hello from Italy here. How are you doing in Poland?
Well, we are quite good. How are you?
Well, even me, I'm doing quite good, but you have to consider that all around me here, everything is locked down, as you probably know. So this is the third week that we are in this situation, and it's not easy, but we can go through, okay?
Well, it's very similar in Poland. We have quite similar situation. We are also maybe not locked down, but there is this recommendation to stay in home if you don't need to go anywhere. So it's a quite, as I said, similar situation. Nevertheless, I would like to speak about this, this plan to save an American economy. This plan to pump $2 trillion. It's a very tremendous amount. I don't know have you ever heard about this this kind of plan, this kind of amount to pump in economy?
Well, imagine this is really impressive. Imagine simply to spend some time to count that money. It's a complicated thing. So this is really an impressive amount of money that they put in the economy. And also remember that this is something that if the medicine is so relevant, imagine how impacting is the disease. So this is a real problem, okay? Or this is not, because imagine this money are not pushed into the system, are not pumped into the system to create the proper environment from the medical side, okay? This is because the US government is thinking that after this big wave that is coming with the pandemic, we can have another and even bigger wave coming after that will be the economic recession, a very big economic recession. And this is why they pump all this money in the system. Imagine that we are obviously all focused on the stocks market, on the currencies market, but we are not normally so involved in the bonds market, like not only government bond, but especially if we consider corporate bonds. This is a real problem. Imagine that in the plan of the Federal Reserve, there is also a very big stimulus of liquidity, a very big quantitative easing in the market to buy also corporate bonds, because we have a real problem. And imagine that if we consider people that are money manager, so they are managing the savings of the investors, the most of the money they put not in the stocks market, but in the fixed income market. And this market really collapsed in some cases, especially the corporate bonds, really a lot. So this is a real big problem that the Federal Reserve has clearly in its mind, and that's why they are acting. So we need to wait for some signals that obviously from the, let me say, from the leg, if you consider the sanitary leg, we need to wait for some information about the pandemic. But on the other side, there will be another terrible pandemic that will come after, that is the social and economic one that we call normally recession, but that this time will be probably a big recession. When I say probably, this is the big X. This is the big number we do not know, And this is what the market, the global market all over the world are trying to, let me say, understand better, just to find an equilibrium. If we look at the U.S. market, what let me say, I will go for you to the most evaluated indices, the index that is the S&P 500. What we can see is that after this big collapse, what is becoming right now reality is that the market, with a big volatility that is still remaining, is trying to finding an equilibrium. The equilibrium is really complicated to find, but is the best thing that the markets can do globally. Okay.
And what is your suggestion? What is your prediction? If you are wondering how this pumping money will impact on on financial markets, also on stock markets.
Well, for sure, what we are seeing in these days is that the U.S. market seems to be a little bit delayed if we compare it with, for example, the Italian index, because we in Italy were experiencing this problem that is causing also a lot of impact even from the emotional side, okay? Not only for investors, but for normal people on their daily activity that are impacted really a lot. So I think that more or less a very similar figure was created on both the market. Look, for example, at this. We have a very clear sign around here, we have a very clear sign around here that is this minimum, that now is something that is more or less around 2,200 points of S&P 500, that we can consider as the main support, especially because of a reaction that we have seen later. And then we have this area, okay, especially around here, so more or less 2,500 points on the S&P 500, that we can consider as the resistance, okay? So what are the market doing worldwide? They are trying to consolidate. They don't know really how this impact will go through, how long. This is the big X, this is the big question, how long? So some days they are more optimistic, some other they are more pessimistic, but what the market are trying to do is to try to understand which new values we need to work with to understand more or less where we have to find a new equilibrium in the market. So it seems right now that for the S&P 500, we are between these two levels. And I expect the market to continue consolidating around these prices, okay? If, and through the time, we will know more about, we will receive more details about how long it will last. And the more these details will be precise, the more the market will be able to find the proper price for the stocks and for the indices. And so we will see if this consolidation was at the right price, at the proper price, or if it was too low or too high. I think you understand. So we will see through the time that the market will start a new situation here, not such a big volatility like it was before, but a new moment in which they will consolidate, okay? They will create something like a sideways. And when we will receive more news, maybe they will try to consolidate a little bit higher or lower. It depends from the news that are coming.
Okay, so one thing are indices, and the second thing I want to talk about are commodities, especially crude oil. What can you see? Looking at the crude oil, you see some potential for, I don't know, for example, and some uptrend movement, or you see that it's really going down and down?
Okay, imagine that on crude oil, we have two different plates. From one side, we have a demand, as we discussed last time. From the other side, we have the suppliers that can act, reducing the quantity of oil they pump every day, okay? And in this case, they decided not to act. Remember the OPEC problem that we have seen recently, okay? So in this moment, this is a market guided for the crude oil only from the demand. And as you have seen here, we are quite a little bit, let me say, in advance if we compare it to the stocks market. Because after the big collapse that we have seen through here, and especially here, okay, when the market went down $50, but now it is some days that this market is trying to find, let me say, more or less an equilibrium, okay? Can you see here clearly, okay? Around here. So we have a support here, a little bit over 20, and we have a resistance here. That is more or less the area between 26 and 28. That is also, let me say, the area that if we go back through the time, was represented by this previous level that we have seen in 2016. So imagine that we have this area, okay, that is more or less the area of resistance, and this is the area of a support. This eventual potential recovery of the price of oil is, for the moment, only connected to, let me say, an increasing of a demand that it seems here in Europe not to be tomorrow, okay? So this is really clear to me.
Okay.
We will see through the time.
Yes, I understand. But if we look at the crude oil, well, first of all, we are wondering because the crude oil is a commodity. It's not a stock that can go from, example, $100 to $100 to 10 cents. Crude oil. Do you really think that is a possibility that crude oil will go more down? It will cost, for example, like $20 per barrel or maybe less. Is it possible?
Well, it's clearly a situation that we can call extreme. So imagine that right now, even because right now everything is locked down, so there's no demand, okay? So what we can expect is, what we must think is it possible that the demand will collapse even more than this? Well, imagining that it seems that all the Western world is in a certain way locked down, I think that we are not so far from the bottom, but maybe I can do a big mistake. On the other side, if the key will be turned on again and the economy will start again to produce, okay, well, I think that the demand will increase quite fast, so that we can see the price going up. And it will be also a very important trigger for the stocks market, because this is really a benchmark that we must look at. On the other side, if it will happen even in other countries in Europe and maybe in US, that after this very, let me say, already restrictive measures, like it happened in Italy, even in Europe will happen that all the industries will be closed, as it is reality since Monday in Italy. Well, maybe the price can go even a little bit down, but I think that this possibility is already in a certain way included in the present prices. So let me say that I do not expect it to collapse a lot from these prices, but you know, this is not something I can bet on. This is only a sensation, okay?
Okay. Davide, thank you very much for this conversation. Thank you for your analysis. My guest and yours was Davide Biocchi, trader from Directa.
Ciao from Italy.
Okay.